Hi, everybody. Happy Sunday. This is Ronnie, and you're at Trading with Ronnie. This is a channel where you can find tips and guidance on short, medium, and long-term strategies for swing trading or part-time trading for successful financial independence. So this is really my journey on the same path, really looking for successful swing trade opportunities so that I don't have to invest as often or as frequently as perhaps day traders or more regular investors. I like to kind of set it and forget it at least for a few days. So I look at more long-term trends, longer-term time periods, and really try to give the best input and point of view on what's happening with the market with that lens, the swing trading lens for part-time traders. So if you want to join me on my journey, please subscribe and follow. Like the video if you like your content. Add some questions for me at the bottom. I'm happy to take questions and evaluate any kind of stocks that you all have ideas on as well. Would love to hear from y'all. So today we're going to go over, this is the end of the week, almost the end of the month. It's Sunday, January 28th, and we're almost at the end of January. So we got 2 more trading days in the month, 3. And really, January drives the rest of the year historically. 80% of the time, depending on how January does, so goes the year. So we're going to really be watching closely this week because Wednesday, the Fed is coming out with their guidance and their decision on interest rates. And there's also a heavy load of economic data this week as well, which will drive the market. So we will talk about all of that today and give a little bit of insight into some trading opportunities going forward in this coming quarter, the first quarter, as we figure out how the market is going to shape up for January. So a lot of this is going to be dependent upon this economic data this week, but there are some opportunities even within that space that shouldn't be affected by inflation, by the Fed's move too much. So we'll talk about those too. So we're going to start with the markets, get into some core sectors, get into some stock opportunities, and some updates on the positions that I've been in or been talking about on my last video. So let's get to it. So the first thing here we're going to go over is this S&P 500 chart. So this is the SPX, the index, and I've been talking about this all-time high here, previous all-time high, that it was kind of pushing up against this 47.18 area. It's 48.18, sorry. And so, previously the past couple of weeks, we've been talking about potentially it rolling over from a double top because I hadn't crossed above that all-time high yet. Well, as you can see, it has blown past that and is just screaming higher. So that changes a little bit the narrative on the S&P 500. And as some of you know who've been following me, I was in a position in the SPY. So we'll go into the SPY for a second, which was a call spread. So I do trade options for swing trades as a potential longer term position. And most of the time I'm selling option spreads. And so I had sold some call spreads that I got out of last week early, and then the market has gone like completely parabolic to the upside really since then. It hit my stop, so I had, of course, sold my position down here, and got stopped out of my last one option spread that I had left over that I was holding on to. So this was kind of break even or even a little bit of loss, but the rest of it was just a small gain as well because I've been in it since back here. So really didn't make too much money, if any, on this trade. But I think it's an important lesson to set stops and to make sure that you know when your entries and exits are going to be before you get into a position. So if you look at the S&P 500 as a whole, I mean, it really is in this now cup and kind of handle pattern. It's very clear. It didn't roll over up here at the last all-time high. It actually went through it. So there are a couple of opportunities here, depending on how the economic data turns out this week and what happens to the market. But let's say the Fed wasn't going to be giving its decision this week. We have this Fibonacci retracement from the prior all-time high, where it hasn't even retraced back to it, but there is something called an extension. So sometimes, this is kind of a predictive potential, not really predictive, but potential targets, right, to the upside. If you don't have, it's like, this is like clear air up here. There's no targets. So if you have no targets to the upside, you could look at these Fibonacci extensions as potentials. Now, the first one's coming up here around in the SPY around 492, and then there's a 520. But I'll go back to the S&P 500 index. So I'm going to show you if this truly, if this cup and handle pattern continues to play out and it isn't a failed breakout. So it very well could be a failed breakout after the Fed minutes and the economic data, depending on what that economic data shows, right? I think the market is quite overextended right now based on the condition of the economy that we've been talking about. It's mixed, and we'll talk about that in a minute. So, but in a general sense, if you look at this weekly chart pattern, it is relatively cup and handle like. And if you were to even just take and what I did here for this box, actually, I'm going to go ahead and extend this out a little bit so you can see it. But the length of this box, like the height rather of this box, is the same as the height of this cup, right? So if you look at the depth of this cup rather, and so I've measured this depth from the top to the bottom here, and then just duplicated it and used that kind of as a potential target for the S&P 500. You can see that's quite a long way to go. But in a typical cup and handle pattern, that is the target that you can set as a potential move, right? The potential expected move could be the depth of the cup itself, which is what this box shows, which shows the S&P 500 around 5,600. Now, that's not to say that it's going to go in a straight line, right? So it may not go in a direct straight line, but it could eventually get up there, depending on how strong the state of the economy is. So that's the S&P 500, and we'll talk a little bit about the economy and the economic impact of that. Now, the other index that we've been talking about a lot is the Russell 2000. So I'm going to put this on monthly because it's a lot cleaner. So we've been talking about it being weaker than the rest of the markets, which it is. And you can see here, it has had a failed breakout past this consolidation range and hasn't actually made it back there yet. But, you can see it punched in, failed, and is working its way back up. Pardon. Excuse me. So, we're watching. I'm watching the S&P 5. The Russell 2000 here, thinking about how is it going to move based on the interest rates, because a lot of these small cap stocks and financial stocks, which make up the Russell 2000, are going to likely be impacted by this week's Fed decision. So we'll look at this, but if it doesn't ever make it back up to this 2071 area, it's a potential for continued weakness compared to the rest of the markets, or at least sideways momentum, right? Sideways action rather. And there is this trend line from the COVID low, which is still here. It's still intact. So it could just make its way back down there and bounce, or it could push through and go higher. But I think a lot of it is, you can kind of, if it were to make it back up to this range here, or this breakout area here, previous breakout area, and roll over, at least you have an opportunity to have a stop very clearly defined. Your stop would be at this 2071 level. And you would trade that, of course, using the IWM, which is the ETF for the Russell 2000. So this is what I trade, and you can see the ranges I put in here and kind of my prior entry point. I did have a position there previously, which I'm out of now. But it's an opportunity. I'm watching it right now. And based on this week's economic data and the way that it acts, if it doesn't push up through this 205.49 area, looking to kind of sell some call spreads into that up move if it rolls back over. So that's the IWM. So thinking about kind of this continued underperformance in the IWM and how we can take advantage of that. And I think it's going to be wholly dependent on the decision this week by the Fed. Okay. So another sector that we've been talking about is energy. So I'm going to go into energy using both crude oil and the XLE. So looking at crude oil, it's bounced quite hard since the last time we reviewed it last week. And so you can see it's in this range. So I've marked off kind of some range buffers, I guess, buffers of the top and bottom of this range that it's in and it has been in. And so, what I had originally targeted for the crude oil was for some weakness, and I had been short energy for some time. But as you can see, what I had mentioned previously is it does have a lower high, a higher low here, and that could be bullish. And if it didn't break back down below this purple kind of trend line and actually back below this low here of 69.26, that was actually bullish for it. Now I was short XLE, which is the energy ETF, energy stocks, as crude was kind of weak, and then the markets were a little bit less strong than they are now. So I have since exited my XLE short position completely. I'd been getting out of it over time, and I think the last time we spoke here was a week ago or so, and I actually was still holding on. So I got out of it coming down into this drop, but I still had some left. And my target actually from the last time I evaluated the chart was between 77 and 78. I didn't even get down there. So you can see here, let me go to the weekly chart. It didn't even reach that 77, 78 area. I think the low was maybe 78.98 right here. And so as this hammer pattern in this candlestick occurred, that's usually kind of a reversal pattern, right? So I looked for the next bar to close above that and then a confirmation bar before I actually got out. So I didn't get out of my short position way down here. I got out of it here on this day with the confirmation that it wasn't going to, go back down. And it is a good process to, you don't want to follow something into a move like this. You don't want to hold on to something into a move like this. So if it has a reversal pattern, just look for a confirmation day. That's conservative. You could obviously get out of it anytime you want. Right on this hammer pattern would have been fine too. But sometimes those, roll back over. So you have to kind of just look for confirmation, which is what I did. And I did get out of my position fully, which was pretty profitable. I've been short it for some time, so it's been pretty profitable over the past several weeks. So really looking at XLE, it's quite strong, and this is again because the stock market is very strong, right? Energy in itself is also showing some revitalization here and a bounce. I'm going to look at what crude does to determine my next move in energy, but right now crude is stronger. It's made higher lows, and unless it rolls back over, it has this downtrend still that it's in, but unless it rolls back over and really breaks this purple trend line, even if it comes back up and goes down and breaks it, I'm really not going to get too short energy for the near term. But that's just, keep an eye on it from an economic perspective. It can change. There's a lot of geopolitical stuff happening too. Okay, so outside of energy, we had also talked a little bit about TLT and bonds. So I'll go into TLT a little bit. Still not really doing what I am waiting for, but it still hasn't also broken below this prior kind of shoulder, if you look at it as a reverse head and shoulders pattern potentially. So it hasn't broken below this 91.98 low from over here, which is what we talked about. If it does break below it, it's just not a trade. But if it bounces here, I would look to get long this TLT into this area, this range over here on the monthly. Let me show you. Yeah, so kind of a retracement up to this 38.2 area or this range, and so that's what I'm looking for. It's not a great, it's not an immediate trade. It's just like a watch, a wait and watch. So keep an eye on the TLT. Obviously, the interest rates directly impact this. So let's see what the Fed does. The next thing we're going to talk about is gold. In GLD is the ETF that I trade usually, but if you look at gold itself on the futures, it's still relatively in an uptrend. Just to kind of give you a brief update, because no action here. I don't have a trade except for physical gold, but it's still in an uptrend. So it's still on the midline of this kind of channel that it's been in, and it's doing well. But gold is still relatively positive. And then we'll go to the US dollar next. And I will say the last time I did a video, I think I put in USD for the US dollar chart, and it is actually not. I meant to put in UUP, which is what I use for the US dollar. There's also the Dixie, which is the actual US dollar index, the cash index on the US dollar. So let's talk a little bit about the US dollar. So in a general sense, it is bouncing from a low of 100, around 100.5. It is continuing to show some strength here. If the Fed, and again, this is a higher low also if you look at it longer term, right? So there's this low down here in July, and now this low here in December. It hasn't been breached, and so it's still a higher low. And what I mean to say here is I feel like, depending on the Fed decision, I believe that the dollar will show continued strength. If we don't cut rates in March, which I don't anticipate that we will, but we might. This is just my thesis based on the economic data, which we'll talk about now in a moment. But based on where our dollar and our interest rates stand compared to other economies and other countries, the dollar should stay relatively strong. I'm not going to say it's going to go all the way back up to here or have a move like this, but it should be, relatively strong compared to other currencies, and that should help American companies relative to others. Depending on where they do business, of course. There's a lot of variables there, but U.S. dollar's relatively strong. And so if you think about, let's talk about a little bit the economic situation. So I'm going to pull in some data so you can see, what's happening. And as you can see, last week we had some data on the core PCE, which is prices, right? The prices in the U.S., excluding food and energy, basically inflation. And it looked like it was declining, still not declining. It actually went up, but it looked like it was still moderate, right? So there's still subdued inflation is what the narrative is around inflation. Whereas it didn't actually go down, but it was still pretty low. So the market expected 3% increase. It rose by 2.9%, and the monthly gauge was up by 0.2% compared to a 0.1% decline in November. So even though it creeped up, it was still lower than the average, and it's still considered subdued. So, this inflation gauge, and actually one of the I think we talked about existing home sales last time and how they were at a 13-year low with existing home sales at the last report of it. Now you can see on this economics data from last week, the pending home sales, however, soared 8.3% in December. So, complete flip, right? Soared 8.3% month over month in December, beating the forecast of a 1.5% increase. So, massive flip in the pending home sales. obviously much stronger than was expected, which is, it can be bad for the fact that the Fed probably will look at that data and may choose not to cut the rates as quickly as they had thought, because that's pretty bullish. Also there is I'm just going to show you the chart on this pending home sales as well really quickly. So this is kind of from January, right? January it was strong. And even if you go back, and it's been a week all year because the interest rates are so high. And really the interest rates haven't fallen that much, but they did fall a little bit, like the home loan rates. And that's a massive, there was obviously some demand that had been waiting for a little bit of a dip. And so if you go back kind of 5 years outside of COVID, let's go back a little further. Outside of COVID, that's still pretty high, right? So relatively, like even if you go down into the 2014, 15, that decade between 2010 and 2020, the averages are still relatively low compared to this past year. There have been a couple of massive spikes. So with, of course, some decreased demand due to the interest rates rising. And you can see here the interest rates, again, the Fed funds rate is still high, and yet the pending home sales is getting stronger, which is interesting. So we'll see what the Fed has to say about that at the meeting. There is also a lot of other data coming out this week. So if you go to the calendar here, obviously we have nothing on Monday except for the Dallas Fed Manufacturing Index. The more major events come starting Tuesday. You've got the Case-Shiller home prices, of course. So we'll see how home prices fare year over year and month over month. Job openings data will come in on Tuesday as well. Wednesday, of course, is the largely impactful data of the Fed interest rate decision and the press conference. And Thursday, we have manufacturing PMI, as well as Friday, the non-farm payrolls and unemployment. So all really big data points that the Fed uses to make its decisions on interest rates. So we shall see how that goes. But all of that to say that there is a lot of potential for movement here in the market this week. And so lastly, before we end the video, because it is at 22 minutes already, I don't like to make it too long, but lastly, I want to talk about the specific trade opportunities. So we talked, before on healthcare. So XLV, which usually does relatively well in a somewhat recessionary economy, but the market's strong, but the economy itself is technically mixed to recessionary based on the data. So here you can see the XLV, and we talked a little bit about it potentially. I'm looking for a pullback to buy it. It did pull back to this 137.19 area, but I did not get in the position yet. I'm hoping, hope is a bad word to use, but I am looking for this week to be weak on the market based on the Fed's decision potentially to not cut interest rates. And so potentially, I could have a little bit more of a pullback in XLV before getting into it. I would like to see a little pullback. So I'm watching XLV for a pullback to get into it long, because I think it is going to break this pattern and go higher over time, over the next several months. So that's XLV. It's like a watch and wait based on the data here as well. I also want to talk about Apple for a second. Let's go into Apple, and there are a lot of things here. So as mentioned, I've been bearish on Apple, and I've actually been. I was waiting for it to fill this gap, if you recall. So here's the daily chart on the left, and I was looking for it to fill this gap here between 188-ish and 192-ish. And what I had mentioned is if it fills the gap and rolls over, I'm going to short it again. It did fill the gap, and I did not short it that day, but I did the next day at the beginning of the day. So I'm actually in the negative on this position, but coming back actually. So because I added some more up here at this lower high. So looking for Apple to, and I'm going to show you the weekly chart as well, so you can see this kind of pretty bad weekly bar also. So looking for continued downside in Apple, potentially down, into this range here, into the lower range. So I have a few call spreads that I sold. One I sold, it's 195 210, and the other one is a 200 210 in March. So these are the other section of, or tranche, I guess, of call spreads that I sold. So here are my positions waiting to be bought back. Obviously, this is not where they're going to be bought back. This depends on the timing, right? So theta decay will cause this to be changing over time. But in a general sense, I'd like to sell my call spreads between 50 and 60% profit. So even if they make, I don't hold them till the end. So one is a February call spread, which is this one, and the 4 down here are for March. So I have some time on this, and so I anticipate that over the next few weeks, Apple will either continue to stay going sideways or down. And really, this range is what I'm looking for as a target. This range right here, between 180. 272 and the bottom, this double bottom down here, like around 180-ish. So that's what I'm expecting it to get back to over time. But even if it doesn't go all the way there and just kind of stays in this area underneath 195, those two trades will be profitable. So that's Apple, and I'm still in that. And actually, even if you're not in it, you can absolutely get in that trade. I know it has earnings, which is something to watch out for. It's got earnings on the 1st. So if you want to wait till after earnings to make a trade, that's also fine, depending on how it acts. My trades are kind of well past the earnings, so I'm sticking with them. But, it is, if you look at it holistically, it's a lower high. It's a pretty bearish weekly bar, which could signal continued downside. It also, within this range here, even if I delete this drawing here, right? So if I delete this range, the broader range, it did peak into this range from where it turned over last time and then rolled right back over. So this is actually still a pretty good trade to get into even now. So you could potentially sell some call spreads above 196, 197. Further out, right? Because you don't want to mess with the earnings situation. You want to give yourself a little time, maybe March. So that's Apple. And then finally, the last one I want to talk about is let's see. We'll talk about crypto miners last. Let me talk about Tesla real quick, because I'm actually looking at getting into it long. We had talked about just for a short trade, like for like a week or so trade. Nothing monthly or anything, or multiple weeks, but maybe like a week or so, depending on the action this week. So you can see here Tesla, and I've been bearish on it, but I never got into the position. So it's kind of like FOMOing a little bit about not getting short Tesla up here, which is what kind of the pattern had shown, right? This is a downtrend. It's in a longer downtrend as well, if you look at it. But even within this range on the weekly chart, it's in this kind of volatile, choppy range. And it's at the bottom of this range. And so, if you look at it as cycles, right, it looks like it's just finishing out the cycle of its downtrend. So over the next few days, if it manages to stay above this kind of range here from where it broke out, I will look to get into it long from the perspective, again, of selling short the put spreads. So I might sell some put spreads underneath 160, 170, depending on where it bounces, if it bounces. So as long as it doesn't just break this downtrend that it's in, I'm thinking about getting long Tesla for the short term, just for a short term bounce, because I think it's a little overdone right now, and it's already at the bottom of this range, and it looks like a good opportunity to maybe just have a trade for a little bit of a bounce in Tesla. Of course, Tesla, people are very mixed on Tesla in general. So, depending on, it's news driven. It's got a lot that impacts it. But for the short term, I think it has a good opportunity to bounce. And there's a gap here as well that you can use as targets, as it bounces up, this gap right here. So that's Tesla. And the last one is going to be Bitcoin miners. Now, we talked about this being speculative, and I think the last time that we spoke, none of these green bars had occurred. So what I was speaking to last time was about potentially getting into Bitcoin miners, so long as it didn't, as long as they didn't kind of crash below their more recent range, right, from where they broke out the first time this past month. So this is Mara. So I had also said to just look at the strongest ones in their sector, which in the ones that I looked at were Mara and CleanSpark, I believe. So Mara has actually bounced a little bit, and I was able to get in it in this area, but I got in it. I sold some puts, naked puts. So I sold some 13 puts because I would love to get into Mara around $13. For the next up move. Like if you think about dollar cost averaging, if it does hit 13, great, I get to buy Mara at 13. And I only do that in cases where I want to buy the stock itself and I want to buy it lower. And in this case, I do want to have a little position in this Bitcoin miner. Pardon. And so I was able to sell some Mara puts and also buy it outright. So it's a pretty cheap stock. So I was able to buy a little bit. So I'm dollar cost averaging into it now, because I don't know if it's just going to go sideways till the halving and then go up, or if it's going to come back down and bounce and then go up. But I think just getting small is the way to go. So it's just slowly kind of building a position, which is what I'm doing right now. So I've chosen Mara as my kind of proxy for the Bitcoin miners. There are also other ones. I think we talked about CleanSpark last time. It's also bounced pretty well, you see. Riot wasn't looking very strong before, but it has also bounced. I think we talked about Hut, which I have since found out had a short report on it, which is why it had this massive kind of flush to the downside, but it's also bouncing. There was a company that was shorting it heavily, so that's why it blew past its former support. So Mara is my choice here for the short term on again, speculative position in cryptocurrency, but with Bitcoin showing some strength here, quite a bit of strength in the past week. It's a good opportunity to try to build a position if you want it. And again, Bitcoin, we've talked about, these are the levels on Bitcoin that I'm looking at. There's this range here, and it did bounce pretty well from this range, from the prior time. This range is built from the prior breakout. It tapped into it, actually bounced from that. So as long as it kind of stays in this sideways range, I'll still be, in those minor positions, even if it goes down to the 38.2 Fibonacci retracement, because the halving is coming in April, right around here. And so I anticipate that it may still consolidate, and then I expect another run after the halving, like it has done in prior years. So that is it for today. I want to thank y'all for watching. Thank you guys for listening to my thoughts, and I understand that. Please understand, rather, that these are my opinions, my strategies, my thesis. But I love having you guys on this journey, and I would really appreciate your comments, thoughts, any kind of ideas that you may have for discussion next time. So subscribe, like, follow if you'd like to. I would love to have more of you in the community, and love to have your thoughts on these videos that I'm creating with really the intent of supporting the part-time trader. So thanks again, and have a great weekend.